Oh, hello and welcome to the last trading day of September, last trading day of the third quarter of 2024 right here in Lagos, Nigeria. Let's get to the top markets that set your agenda now. We see for oil markets, last week it was a negative close for the week. We see Brent was down about 3%. Closing Friday's trade at $71.89 a barrel. Then WTI had a bigger drop there, 5% down for the week at $68.18. But fast forward to today, we're seeing an upgrade there with price. We're seeing a jump there for Brent and WTI. That's for today's prices, 0.71%, $72.49 a barrel. WTI crude, 0.68%, $68.61. And we know it's still geopolitics right there driving sentiment. Last week, it was all about supply concerns. We know there was oversupply expected into the market. We know when there's too much supply of a product, we see that prices actually go down. So that's what we saw last week. But starting today, we're seeing geopolitics in the Middle East play into the prices today. To the FX market, we see the Naira gained on Friday after a volatile week. It was up about 2.24%, but the Naira was down for the week about over 1% for the week. NAFEX 1,668, that was down 0.22%. But we know in the parallel market is farther away, from these prices, but we still see volatility even for the whole quarter of this third quarter in 2024. To other stories now, we see BUA Foods PLC announced a 74.4% increase in revenue, reaching 729 billion naira for the financial year 2023, up from its 2022 revenue. This growth was highlighted by the chairman of the company, Mr. Abdulsamad Rabiu, at the company's third annual general meeting in Abuja. Mr. Rabiu says despite prevailing economic challenges, BUA Foods has demonstrated resilience with earnings before interest, taxes, depreciation and amortization, that's EBITDA, surging 83.6%. Take a listen.
This is the third annual general meeting of BUA Foods PLC, and the chairman of the company is leading other members of the management and shareholders at the meeting. The meeting is to lay the report of the directors, statement of financial position as at 31 December 2023, together with a statement of profit or loss and other comprehensive income for the year ended 31 December 2023.
So it's a business that I am, very, very passionate about.
Riding on the success of the report, the management plans to create more visibility for the company's products with a plot to be the largest producer of pasta in the country.
A few days ago, we signed a contract with a company, called Fava of Italy to expand the pasta, milling in Port Harcourt. And we are going to have 9 additional lines of 6 tons per hour, each line per hour, so total of 400,000 tons per annum. And that, I think, signing represents probably the largest single, investment as far as pasta milling is concerned.
The shareholders had an interactive session with the management, and one issue that dominated the conversation is a plea for the management of the company to provide scholarships for their children.
Madam Obidei raised the issue of, the company supporting the children of shareholders. I believe that is important and is something that I think the company should, consider. So we'll discuss internally to see how we can support that. And I know Mrs. Bakari also mentioned, apart from the employment, also see if we can grant some scholarships to the children of our shareholders. So I think that is something that we should consider.
Mr. Rabiu, who is presiding over the meeting, moves a motion to adopt the recommendation of the directors and also approve the recommended dividend for shareholders for the close of business for the year 2023.
I hereby move a motion to adopt the recommendation of the directors and approve the recommended dividend of 5 Naira 50 kobo per one ordinary share of 50 kobo, amounting to a total dividend of 99 billion Naira to be paid to shareholders whose names appear in the company's register of members at the close of business on the 23rd August 2023. Can we have somebody to please second the motion?
The company attributes the success achieved in a year to effective management and leveraging opportunities.
The company is very efficient, and we made, 99 billion Naira profit, or 100 billion Naira, I think, profit, dividend of 99 billion last year. That is because of the efficiency of the business, as I mentioned earlier. And also, in fact, it would have been more than that if we had, decided to follow, what other companies were doing by increasing prices. So we decided deliberately, to maintain, lower prices. BUA Foods products are still the cheapest today.
Our journey to date has been that of joy for us, because we have kept very fully to our commitment in terms of our strategies, basically centered around expansion. And these expansions are basically for food manufacturing platforms to provide possibilities for us to supply more food into the Nigerian market. This we have done very successfully with the launch of our new factories in Port Harcourt for the flour and the pasta divisions. We also commercialized our rice divisions also in Kano. And so what has done basically is also to present us the opportunity to expand and diversify our scalability business, as it were. So today, as it stands, as we also say, we have consistently deliver value to our stakeholders in line with our commitment. And of course, we do know very clearly that playing in this economy, it comes with a lot of volatility, but we continue to sustain resilience as a business.
The company is committing to supporting the federal government and Nigerians by contributing to the moderation of food prices in the country.
And as major central bankers begin cutting interest rates, experts hope this would make available affordable credit for countries and businesses. But a major issue impacting Africa is credit ratings. And according to Africa Development Bank President, Mr. Akinwumi Adesina, credit rating biases to Africa need to be eliminated. He made the comment at the concluded 79th UN General Assembly. Take a listen.
The future we are in today was the past. The future we build for tomorrow must be based on better decisions taken today. Building that future for Africa requires more than reform of the global financial architecture. We need new institutional support systems to build a more solid and resilient future for Africa. First, we must tackle the biases in the current global credit rating systems that leads to higher costs of accessing capital for Africa than other parts of the world. The establishment of the Africa Credit Rating Agency, called for by the African Union, is critical to achieving this. Second, the global financial system does not protect Africa from contagious effects of global financial shocks. Africa is the only region of the world without a financial safety net. That's why it's critical to establish the African Financial Stability Mechanism to provide safety net for Africa. Third, we must address risks facing Africa in leveraging greater private sector financing. That's why the African Development Bank is pulling all its guarantee instruments into an African insurance and guarantee agency that will deploy risk instruments at scale to bring more investments to Africa. Fourth, we must tackle the rising insecurity in Africa, the rising expenditures on security, which are displacing financing for development. To achieve this, the African Development Bank is working with the African Union to establish security index investment bonds that will be used to tackle the reconstruction of areas damaged by conflicts. And finally, Africa's vast forests, biodiversity, and carbon sinks are the key for saving the world. It is time to properly value the green assets of Africa and include that in the GDP of Africa. Africa must move from being green and cash poor to being green rich through proper valuation of its natural capital in its GDP. These foundations will assure a much richer and wealthier Africa for future generations. They will build wealthier and a more resilient Africa and move it into a future with sound financial structures to bolster its development. The future is Africa's, and we will take it on boldly.
Right, as this trading month, winds down, September and the third quarter has been a roller coaster for the Naira and the stock market. But we see the stock market for the month up by 1.9% at 98,458 points. That's for the all-share index for the stock market. But for the quarter, it's down about 1.6%. Then for the Naira, we see the Naira is down 2.12%. That's for the third quarter of 2024. It started at 1,508 Naira, and for September, that's last Friday, 1,540 Naira. So it's down about 2.12%. But who knows, maybe some kind of a big jump could come in the trading session today. We'll definitely find out, even though this was a month that we had the 50 basis points rate hike. But joining me now to unpack all of this, we have Mr. Mukhtar Mohammed, CEO, Finance with Mukhtar, joining me right here in the studio. Great to have you. Good morning.
It's a pleasure.
So it's definitely been an interesting third quarter, for the market and for the Naira. But we see they're both down. When you look at it from the quarter basis. But for the month, not so bad.
Not so bad.
For the equities market. But I want to drill down on the Naira now. We saw a 50 basis points rate hike in this month. So it's been hike after hike. Even in the third quarter, but we're still seeing that pressure, on the Naira. And, some will say, if you look at most of the problems we have right now, from, rising prices to the price of PMS, some say it's because of the Naira, at this point. If the Naira was strong, we might not be having to pay so much.
Definitely.
How are you seeing that?
I totally agree with them. We did two very, very critical restructuring of our economy. Immediately Mr. President came in. The floating of the Naira was one of those very, very strong economic policy, and by and by the removal of subsidy, even if now we realize that that subsidy didn't actually go. But again, those were two very, very big policy that were taken without having the structural foundation, and we saw the Naira move. I think for me, the greatest mistake they made was moving the Naira to convert at 960 and then move it to 1,400. And after that, the Naira has not recovered. Every time it got to 1,900. Now, all that is basically trying to make the Naira, make the market more interesting to attract foreign portfolio investors. And really, they have not really come in like that because nobody wants to come in an unstable currency market, like volatility here and there. I think the CBN is doing everything possible to see how they can track FX. And I think for the first time, or maybe for the second time, the CBN is beginning to look, the challenge with the Naira, the challenge with inflation is not just that mopping up liquidity, hiking the rate. You could do all that, but if you don't bring that stability in the exchange rate, you'll just be playing around the corner. Because what we've seen is that, like you said, if you look at importation, today is 1,600, tomorrow is 1,500. President came up that, look, our food inflation is high because over 70% of what we consume we definitely import. Mr. President came out with that policy of removal of tariff. And then we saw that tariff removal up to this moment, we've not seen it really take off because Ministry of Finance, the custom are waiting for Ministry of Finance. So for 2 months now, we've not really categorically said that policy have really taken off. So to stabilize the Naira, they come up with a rate hike now. But if you look at all the rate hike, it's towards making the fixed income space very, very more interesting to attract foreign investors, the kind of return. Just on Friday, they did the OMO auction at 23.something%. You can't beat it anywhere. When you have that, you want to attract more liquidity into the system. And thank God the United Nations General Assembly, we saw that deal about $10 billion coming in. Hopefully it will come in. We saw the deal of Nigerian bottling company say they will invest $1 billion. Let's forget that they still does that before and it didn't happen. Hopefully it will happen. So the Naira will keep on struggling as the fundamental issue of the Naira is liquidity. Like the CBN governor said, we need to up our oil production.
So is liquidity is not some kind of deliberate devaluation of the Naira?
No. Initially, it was tactical devaluation, not deliberate devaluation. knowing that, okay, after that you attract more inflow. But unfortunately, it didn't work. And it didn't work because there was no liquidity. It didn't work because you don't leave your currency to market forces. Market forces would always take advantage of your currency. You need to strike a balance, because as it stands today, I can categorically say, like all international organizations have said, confidently say that the Naira is undervalued. It shouldn't be exchanging at about 1,500 with all the parameters that we have. But again, when market forces have to determine your exchange rate, without you having the war chest, what they are called the liquidity, to really come in and intervene and balance that space, then you continue to have that challenge. Now, the challenge with the market, I keep saying, is not in the NAF autonomous market. That's not the challenge with the market. The willing buyers, because you get the high trade in there, 10 billion, 10 million, 20 million.
Because we see what's playing out in the parallel market at this point.
It's the parallel market, the retail side of the parallel market. We have not been able to stabilize that space, whereby you have those come in to collect 1,000, to collect 5,000, to collect 3,000, to collect 10,000. The demand is high in that place and the supply is low. So CBN intervening, giving Bureau the change 5 at a distance of 1,590. You could always see when those things happen, you normally see that the Naira tend to be a little bit balanced in the parallel market. So that tells you that the challenge of the market is actually from the retail angle. So we need to create stability in the retail angle so that people will now confidently want to do their exchange rate through the bank and then go through the willing buyer, willing seller market. As it stands now, people are looking at slimness measures, especially the SMEs. So the challenge with the Naira still has to do with liquidity, and that liquidity needs to be addressed in the retail sector.
All right, so, looking at, segments of the economy, we have the government, we have people, we have investors, we have, private sector, looking at all of them now, which segment profits from a lower or a Naira that's lost so much strength?
Well, if you look at it now, we look at results, we look at companies, we realize that the financial sector seems to be the one that really gained from that. We thought the oil sector will really gain from it, thinking that the removal of subsidy will make big-time players want to bring in, and then market forces determine the price. But at the start, it wasn't competitive, because the Nigerian Petroleum Corporation, NNPC, still remained the sole importer of petroleum products. So we didn't see that happen. But the financial sector seems to be the one that really benefited from it. If you look at the results that have come in, exchange rate revaluation, all other sectors have really suffered. You look at the communication sector, you look at the industrial sector, you look at the consumable sector, you realize that they are having huge losses because of the exchange of Naira. But when you look at the financial sector, especially the banking sector, they seem to make a lot of progress in that side. But again, you need to look at that progress is relative, because you see those revaluation, you see those non-interest income going up, you see, but you see this expensive going up, such inexpensive. And also, you see the impairment charges going up, non-performing loans. So what do you think they gain one place, they tend to lose it in the other space. So but it's more pronounced in the conglomerate. MTN losing billions, Nestle losing billion, Unilever shareholders from completely wipe up. We saw also, you look at Nigerian brewery, shareholders fund almost completely wipe up. They are coming for the right issue. Right. You see Guinness also struggling. You see most of these big-time companies, pharmaceutical companies, they're struggling. They were the ones that gained during the COVID-19 pandemic. But if you look at their results, they are struggling because crops are becoming more expensive. Nigerians are looking for alternative ways to take care of themselves. The Nigerian health insurance scheme is not covering over 90% or 70% of Nigerians. So everybody seems to be looking for means to have alternative means of medication. So that sector is also not booming. So a lot of challenges. I think the only sector that really gained from this tactical revaluation, if you look at it by the result, I think is the banking sector. If you look at it by investment now, I think the oil and gas sector seems to be leading that, with the recent 10 billion that is coming in, a lot of big-time players selling up their offshore for Nigerian company, onshore for Nigerian company. That is good. That means Nigerians are beginning to take ownership of that sector.
Right. But we keep talking about liquidity. That's keeping the Naira on the losing streak at this point. But looking at the last administration, the economic managers from the last administration into this administration, would you say they're really taking the Naira seriously?
Well, if you look at the last administration, I think they were really the one that brought us to our knees. I must say it with all sincerity. I think the 8 years of President Buhari administration was one of the worst administrations we've ever had economically. There were no synergy. There were intervention by CBN, direct intervention, indirect intervention. We saw liquidity. We saw the removal, I mean, the cancelling of that retail sector of the FX market. They didn't replace it with any other. They gave it to the bank. There was round tipping. They took it from the bank. They needed to address it. So it was all about try and error, try and error, try and error, try and error. They were not attracting liquidity for the 8 years of Buhari administration. Foreign direct investment, portfolio investors investment went to all-time low. So we're now seeing that oil also was at low end at the point where only doing 800,000 barrels per day. The reserve was not made. There were what we gain in terms, what we would have gained in terms, we lose in terms of maintaining that subsidy regime for 8 years. So if you look at it, the Buhari administration was the worst administration economically. Didn't do anything. Now Tinubu came in. Yes, I think the first mistake was that May 29 statement, subsidy is gone, without making adequate provision to mitigate our problem, because Nigerian economy is largely driven. It's a petrodollar economy. Our means of transportation, our means of powering, our energy sector, our power sector, our transportation sector. Up till recently that we are seeing the CNG buses. So you realize that singular decision without adequate preparation led to the kind of inflationary pressure that we've never had before. Then came again the floating of the Naira without adequate preparation in terms of having those liquidity to make sure that the Naira is not undervalued. So we saw the Naira moved, and those were two critical decisions.
The Naira losing strength, impacts you and I.
Well,
much more. Those wage earners, at this point, and it also trickles down into inflation.
Inflation, because when you deny, because 70% of what we eat, even if you say okay, it's not up to 70%, 40%. The machinery that we use for this production, 40% have been imported, so there's still demand on FX. We don't have a better steel industry in Nigeria whereby you can say those machines can be fabricated here. So there's a lot of pressure on the FX market. Now, at the time, NNPC is our cash cow. Yet NNPC was still subsidizing fuel in one way or the other. So what they think to gain in terms of refined sell in terms of crude, they lose in terms of refined petroleum product. And then we're waiting for those local refinery, and finally it came. It came with a lot of challenge. You and I know the challenge of NNPC.
The Dangote refinery will be able to buy oil in Naira
from tomorrow. Hopefully.
What will all of this do for the Naira at some point?
I tell you,
what are you expecting for the fourth quarter for the Naira?
Look, I'm very optimistic. If the data, I say it, if the data that was given to us by the CBN is anything to go by, if that's the real data that tells you that 40% of the demand for FX is driven largely with the importation of refined petroleum products into this country. So you know what it means when demand 40% drops. Definitely, we should see those huge drop in terms of the exchange rate. 40% pressure off the Naira. That is huge. So that could be the game changer. Like I said, it all depends if the data is right, because you hear the CBN saying that, removal of subsidy could also become a challenge in terms of earning FX. Yes, that's true, because you see now, you remove the subsidy, we now begin to get import Naira. They buy it to Naira, not dollar, to make sure that there's stability, there's availability. That is one. Then you lose in terms of making FX available in your foreign reserve. And then you are not producing so much, because if we're producing like the target price of maybe 1.7 million barrels according to the budget, and then we now know that Dangote has come, we can up our to about 2.5 million. Then you realize that the difference in between what you will not be having challenging in any FX, but now we are going about 1.4 million barrels as the last time. So you are seeing those challenges that if you have to now give most of it to Dangote for local refinery, then how much do you have to export outside to earn FX? So like the CBN governor said, for us to have that.
The PIA, has, in the part where you have what can go out of the country.
But when most of your
what can be used for domestic refining.
Yes, Ladi, but when most of your crude oil are already tied to debt agreements. Remember that NNPC have done a lot of debt agreement. They are paying to crude oil. You cannot relinge on that. Then the IOC, you have an agreement with the IOC. There are a particular barrel of crude that the IOC have to have. That agreement has been there. Even if they said, okay, you prioritize local refinery. That's what I'm saying. By the time you begin to prioritize local refinery, then you lose in terms of the effects that will come in. Because now you are prioritizing local refinery, you're doing it in Naira. You're not doing it in dollars.
Well, for me.
But the good thing is that the president have also said that you are going to, it's going to be fixed. So that's why I said I'm not too sure, because at today's 30th, maybe before the end of today, we'll have the fixed rate whereby Dangote will be buying the crude, because it's going to be like, okay, you buy in dollar, but you pay in Naira to the fixed exchange rate. Now, let that exchange rate, that's my challenge. Will that exchange rate be the real value of the Naira that the CBN thinks? Because
maybe we should just fix the rate at this point.
No, you see, we know what the exchange rate, like the Naira shouldn't be exchanging more than 1,000, at worst 1,100. Is that the real value of the Naira? Is that what we'll be getting from Dangote? If that is it, then the pressure off the market, and that would drive down the exchange rate. Because now you realize 40% is gone, and they are paying at 1,000, then demand has gone down by 40%, definitely you will begin to see the Naira. But that depends on what is it. If you look at the goods in the tariff sector, when you do the willing buyer, willing seller, that's why you've not been able to address inflation. Now, if you do that and you address inflation, maybe they are buying in Naira now at a fixed rate, and you are now beginning to see the price of gas, the price of PMS comes down. Then you have really tackled inflation.
And we don't need to raise rates anymore.
We don't need to raise rates anymore, because the main challenge now, why are you raising rates? Is because you want the liquidity. You want to attract more foreign investors. Though the CBN, I feel for them, they are between the devil and the deep blue sea, because one, you either want to grow the economy. In growing the economy, you cannot grow the economy with high inflationary rate.
Yeah.
You cannot grow the economy with volatility of the exchange rate. So what do you do?
So it's a really tough balancing act.
So balancing act. So what they did was
sacrificing growth.
Exactly. So for the first time, I think the CBN really addressed something. The CBN governor realized that the challenge, like I said, is all about exchange rate. So it's now looking at how do we earn liquidity in the system. Once we are able to address the exchange rate, we are indirectly,
then all our problems are gone.
We are indirectly tackling inflation. And once you tackle inflation, growth comes automatically.
Fantastic. Thank you so much. Always great having you, Mr. Mukhtar Mohammed, CEO Finance with Mukhtar. Anything that takes pressure off the Naira, I'm up for it at this point.
Thank you.
Thank you so much.
Great having you.
All right, so that's how it's looking today. We're definitely the final trading day of the month of September. That's the day. We'll find out how that plays out. Then tomorrow we'll have a public holiday. Happy birthday, Nigeria, tomorrow. That's happy independence for all of us. And definitely we hope we stay more independent going forward. I'm Ladi Williams. I hand things over now to the Sunrise Daily team.